All right, Surbhi, thanks a lot for taking us through that entire roundup of what brokerages are saying on the insurance space after this announcement did come through. But with that, let's shift focus and bring you some important earnings now. We are in the middle of that season, so let's get our first corporate conversation going. I'm going to invite the management of TCI Express on the show now. The company is in focus after their third quarter earnings, which actually look a little bit weak. So revenue growth has slowed down to around 10%, 9.5% to be precise. The margin has also contracted by around 60 bips to 15.3%. So to discuss the quarter gone by as well as the outlook, we're joined by Chander Agarwal, the Managing Director of TCI Express, to take some questions. Chander, morning, and thanks a lot for joining us. I'm Pavitra. First on your revenue growth itself, like I was mentioning, it has slowed to around 9.5%. So this is significantly lower than what we've seen you do in the past. Can you tell us what's really happening on that front? And with this, what do you expect the full year revenues to look like? Do you think you can still get to that 18-20% kind of band for the full year for FY23? Chander, I think you're on mute.
I apologize. So the Q3 numbers were a surprise for everyone. And the way, we expected Diwali to take off and just spending to kind of unfold, that did not happen. And, it was quite surprising to even see that Diwali actually came at a time when it was a long weekend and there was pretty much no business happening at that point. So that really took a big effect on the cost side, because we were all ready for the the season, the Diwali season, and all of that. And in general, if you look at the year on year, we would still be doing about 17%. Yes, it would probably be a notch lower, only because of the economic situation. There's fundamentally nothing wrong in the company itself. It's just that I have always said that we follow the trend of the economy, and however the economy is going, we would be going 2.5% of that, and that is still intact. There is no change in it.
You said 17%. That's the top line growth?
Yes, top line growth would be about 17%.
And this would be lower than the 18 to 20% that you had told us perhaps 3 months ago.
Yeah, because even what I understand is that the economy is not in great guns.
Right.
And it will, next year, I mean, for sure, Indian economy will be, in a much better place than where it is today.
What about margins? Q3 margins have also significantly declined. What would be the margin outlook?
So this is just a temporary thing that happened. We always maintain about almost 18% plus. And even in during COVID time, we were doing about 18 to 20% margin, 18 to 19% margin. So that still remains intact, and I don't see a change in it at all. In fact, I still stand by the note that I'd given, that every year we will increase our margins by 1%, 1 basis points every year.
Chander, just to understand the factors, I mean, you explained sort of the economic revival or perhaps a slight slowdown post the festive season. That's one. But I believe there's also been some increase in your ad expenses, marketing expenses. Could you just break that down? And maybe as a percentage of sales, to what extent is there an increase, if at all?
I mean, if you look at it, from a total cost point of view, it's the percentage is nothing. It's just that it stood out because we were advertising with CNBC, along with CNBC. So that was just a one-time thing that we had this year. In fact, our costs are still lower than our costs are still lower than 2019. So there isn't like a big spike. It's just that we assume that in the month of Diwali or the Diwali quarter, if we have a little bit of advertising, it would help in the overall business.
And so, I mean, obviously that's a one-off, but totally take your point. I just want to understand if that's sort of a change in trajectory and whether we should expect more of that in the quarters to come. So then let's dial back to the first point that you made, that business simply didn't take off as robustly as you perhaps had anticipated. You have just by a notch lowered your guidance, revenue guidance, from 18 to 20% to 17%, as you were just speaking to Rima. So what are you expecting on headline growth in the quarters ahead? You're not expecting a bigger recovery in the Jan to March quarter. Why is that?
No, we will definitely have a decent recovery. It will probably, go back to, the top line growth levels what we had given. No change in that. We have to be always careful. We have to be careful as to, how everything unfolds. And unfortunately or fortunately, we get affected. That is, India gets affected by the global, situations quite rapidly, and that way, we have to be very cautious in our approach. We just cannot be very aggressive, and then, at the end of the day, we're not even,
Chander, just a quick last point. I'm so sorry to come in over there, but we have to take that break. But just a last point, since you are cautious, is that going to impact your capex? Mangalam was telling us you had an outlay of around 99 crores, I think. That was incurred in 9 months. So what happens to capex now in the last quarter and the next year?
It's still the same. There is no change in that, and we are still debt free. So that is also something which is which is noteworthy. So everything is through internal accruals. So we're not facing any cash flow shortage or any cash flow problems of any sort.
500 crores of capex is still on track.
Yeah, for the next 5 years. Yeah.
All right, Chander, we're going to leave it at that. But thank you very much for joining us and taking us through your outlook for TCI Express. The stock is at the low point of the day. We're almost 3 points lower right now. For the past 5 days, actually, there's been a near 13% cut on the stock. So do keep that in mind.
Valuations for TCI Express are also on the higher side. 35 times forward multiples.
Yeah, I was talking about the revenue slowing down. They've added a number of branches as well in the past 9 months. So, you would expect the revenue to pick up perhaps a little bit more, and he is